Okay, ladies and gentlemen, so this is day one of the journey of teaching you guys what trading is and what is it that I do. So, to start off the day, obviously, our day one, I'm pretty much gonna tell you guys what it really is. Like, what is day trading? So, day trading, in a sense, is literally just um, looking at any market, literally at any market, whatever market, whether it's futures, commodities, indices, metals, forex, the foreign exchange market, anything that is open after the 9:30 mark, that is tradable. Pretty much, day trading in a sense would be not having like any trades open for any more than a day, like, or even overnight trades, you could say, like out of session. Basically, once the market opens to when it closes, you're done for the day. You have no overnight risk or anything. It's you pretty much cut short for the day. Which then, if you switch to swing trading, that is basically you're gonna hold out for multiple days, weeks, months. It's just your own time based kind of thing, which that it creates more risk. I personally don't like swing trading. I don't like having to hold for 3 to 4 days, just for it to hit my stop loss. I think that's I feel like swing trading is a more of a have high money type of game. I feel like you have to have way larger capital to be able to hold for like 2 weeks or whatever. So like if it's just not going your way, you don't risk losing a lot of money, because if you have, let's say you have $1,000, you put in $1,000 and you hold it for 2 weeks and your stop loss is $500, but your take profit is $1,500, but you have it set to where, like, okay, if it takes it all the way up here, okay, I lost $500, and if it's all the way over here, I won. You kind of have, it's kind of a risk you have to take, I guess you could say, because if, like, on the third day you're halfway to your take profit, and then on the next day, like, some crazy move happens, some like high impact news, or Trump makes out a tweet, or some war news pops out of the corner, it can just go completely the opposite way, and you can lose a trade, and it's really nothing much you could do about it. um that's why I personally have stuck to day trading. I kind of want to know within, like, that day if I lost or won. And obviously you can risk a little bit more because you kind of know whether you're going to lose it that day or not. But it's kind of just like a big risk management thing, and like a capital game. If you have high capital, you're going to have a higher chance to be okay. If you lose 3 trades, obviously with your risk management, with one trade you can make it all back. Like, as you guys seen on my Instagram story, I lost yesterday and I literally made it back today. Like, it's kind of just how the game goes. It's just, you never know. You kind of just have to go day by day. And the pretty cool thing about it is, instead of like buying stocks, this is the difference between buying stocks and trading, basically day trading, is that when you buy a stock, if you go buy, let's just say like a Tesla stock, you're buying like a piece of the company. It's basically, you're buying your share. So if the company, I don't know how much a Tesla stock is worth at. We'll just say $200. If it goes up, you know, you'll make your whatever your fraction of the share is, or if you have a full share, you'll make a very small percentage. Like, sometimes just depending how much you put, you can even only make like $1. Which, as in for day trading, if you were to buy, like, if you have an account, you put like a $30, trade, or like you place a trade with, like, realistically, we'll say like $2 3, you have a very very high chance to make like 500 to like $1,000, just because it would, like, each tick would be for $3. So like as it goes up, you're multiplying by that, that multiple. As for stocks, it's kind of just how the stock is performing. It's kind of like, just, you have to buy it, and it's kind of like a go up situation. With day trading, it's both ways. Whether there's a recession or there's a big bull run, you're able to make money both ways. If the market you kind of see it start crashing a little bit, you can even enter like a sell position, and you can make money with it going down. So that's kind of like the great thing about this is literally money both ways. Obviously, I'm not saying you're guaranteed to win every single day. I'm not promising you anything. It's just all depending on your strategy, your bias, your discipline, your psychology, your risk management. There's like a stupid amount of factors that go into this. It's not just like oh, it's going down, let me sell, and it's gonna tank and I'm gonna make $50,000. Like, it's really not how it works. Because that's why there's a thing called like each market has its own it's like volatile in its own way. Like, some are more volatile than others. I know like the US market ones, like the S&P, Nasdaq, and all them. Those are like very high volatile. So like at any given moment, it can literally just suddenly change like it's nothing. Which, as in for other pairs, I'm not very familiar with many pairs that are like non-volatile. I guess I could say like the forex market. There's some pairs that are like they just keep like a steady pace. They kind of like each day they go by their direction, as long as you can find which direction it's going in. Um, I know there's some pretty low volatile markets out there. Um, yeah, so for a sense, basically, yeah, it's just day trading is simply just, you know, picking a market when it's open, entering depending on your bias and your strategy, enter a position, and simply make money. Um, I didn't think I was gonna do a trade recap today, but I kind of want to show you guys what I mean by like the market being high volatile, like having high volatility, and yeah, just kind of basically kind of break down what the market can do at any given point. Like I said, like literally anything can literally fucking change the market like this. I'm talking like a tweet, uh, anything. Like, I'm trying to think. Like, now that I'm like on the video, it's kind of like a really on the spot. Kind of got to think about it. Like, there's like news. Like Iran can literally tweet something. It literally doesn't fucking matter what it is. If it has to do anything with the U.S., it's gonna affect it in any way. Whether it's inflation, whether someone speaks, whether Trump tweets out something, whether Putin even says something. Like, it's crazy. Like, that's why you guys have to be very like well prepared, well like knowledged about this, and have really good risk to reward. Um, and not blow accounts. I mean, everyone's gonna go through that phase. I'm not making this and promising you guys are gonna be like profitable within a week by watching this, because this is more just like of a you guys know what I do. And if you guys wanna get into it and make money, you know, I would just say just take the time, learn. You guys don't just have to watch my YouTube videos and basically go off what I say. Now there's like hundreds of thousands of videos out there. I had to go through it. I had to watch a lot of videos, a stupid amount of videos, write down a lot of notes. I went through a lot of pencils and pens, literally on a notebook. I have the notebook literally half filled out. And I'm talking about like the composition notebook. I bought a simple notebook, simple pens, and then things were running out of ink with how much I wrote down just to be able to learn this. Because this, I can honestly say it did take me like 3 years to master this. And obviously, after reaching a point where I was very profitable, I was having green months, I was consistently making money. And pretty much after thinking of if I really wanted to go through and like actually teach people, because it's kind of hard, because they kind of look up to me to basically teach them, to actually show them what I learned, to be able to make money, and to pretty much, be profitable. Like, they kind of, I guess you could say they want the shortcut. And I completely understand, because I wanted the shortcut when I started. I wanted to be able to make money and not lose so much. But unfortunately for me, like, no one that I knew. There was a couple people that I knew that day traded, that they were, I guess you could say they were pretty consistent. They were making money consistently. But at that time, it was kind of like we all had different strategies, and it was kind of hard to be able to like multi-managed strategies, because then I would get in a loop in my head with my strategy and their strategy, and then I would get mixed up when I would trade. Like in the morning, I'd be like, okay, well, there's a market structure shift right here, but then my strategy didn't consist that, so then I had to go back. And I can say that sometimes it did cost me money, because I guess just for being at work and not being able to like be glued to my phone for 30 minutes, it was kind of hard. It was it was challenging. So then when I went home, the market was already closed. I had to go back and analyze like 1,000 trades on why it went south. And after some time, knowing that a piece of their strategy and a piece of mine was working together, I kind of just ended up piecing it. And maybe like I'd say like 7 or 8 months into the Telegram, I told them, obviously, hey, we, there's a little update on the strategy. Now we're gonna take this, and we're gonna mix it, and it's gonna create this. And ever since then, we went for like, I'd say like a solid, I would say like a solid 2 months of literally straight winning. And when the trade wouldn't play out, or like the candles were moving in the formation that we were looking for, we didn't trade, and we literally lost. I mean, we literally how would I say it? We avoided losing money. Sorry, I got a little mixed up there. But I'll kind of give like a little trade recap on like what is risk management and how it's applied into the markets, and how you guys can use it when you guys trade your own money. Um, it's kind of like it's a simple math kind of thing. So a risk to reward, it could be a 1-to-1, which is basically you risk excuse me, you risk $10 to make $10. 1-to-2 is you risk $10 to make $20, and then a 1-to-3 is you risk $10 to make 30. And obviously if you add zeros, it goes on and on and on. Which, getting a 1-to-1 is literally nothing wrong at all, because in a sense, if the trade, as we can see right here, if the trade is playing out right here and we're down like $3, $4, $5, we haven't lost that trade until it hits that bottom of the red box and it stops you out and your trade closes. Then that's when you lost $10. But if you're getting a 1-to-1, let me dumb this down. If right here, well, it's at 0.99, but we'll just say it's at 1. If this risk to reward ratio was a 1-to-1, that means I made $10 on this move. So now I'm up $10. So now let's say I risked 100. Okay, I risked 100 to make 100. That's literally the same thing. But if it hits right here, then you lost $100. Just come back the next day. If you get a 1-to-1, you make your $100. You're at break even. But if you manage to score a 1-to-2, like we did today, you managed to score a 1-to-2, that means you made $200. So what does that do? The $100 you lost yesterday becomes zero, and the $100 you won that same day with the $200 trade you won, that means you're $100 in profit. And the beauty about it is that you can lose literally 10 trades. You can lose 10 trades for basically 1%, and you could be down 10%. But if you win 5 trades for 2%, you're at 10%. So then that just leaves you at break even. So just because you lost 10 times with just literally a couple wins, with actually scoring a nice 1-to-2, you can literally make that all back. Like, you become a profitable trader when your losses get covered by your wins. Even if you have 50 losses, as long as you can get 25 1-to-2s, you're literally going to be at break even. It's like, it's really kind of like I guess you could say it's like a pay to play, but I don't know. I have to redo that in a whole nother video, kind of explaining risk management more into depth, just because I'm kind of more on the spot and it's kind of like not really what I want to talk about too much on this video about. But yeah, so just always make sure when you risk manage, just always have like a nice 1-to-2. Always try to aim for a 1-to-2. I mean, a 1-to-1 is not bad at all, but I always personally try to aim for a 1-to-2. And if I could score a 1-to-3 and like the market's moving like in a very nice way, I'll hold for a 1-to-3. Like if I score a 1-to-3, how what would I do? One, two, three, three L's. But for one to three, one, two, three, three would literally be like what, a third. I wouldn't even lose too much money. So basically, on the trade that I lost, I literally made it back with one trade, and that was because on the trade that I lost, I got pretty confident and I added another position. So basically, that's another thing I'm gonna talk about. I had added another position, so that basically doubled my risk. So instead of it being a 1 to 2, it was a 2 to 1. So basically, I was gonna risk $200 to make 100, but since I'm aiming for a three, that means I was risking $200 to make $300. Um, Obviously, that's just with like simple numbers, but obviously it gets more complicated depending on your lot position, which basically it can have like cents, so it just becomes a different number, and sometimes you can win a little bit more, sometimes you could lose a little bit more. It's kind of just you kind of just have to kind of see what you're feeling. I wouldn't want to get too greedy and be like, oh, like I'll let it go up a little bit more just to hit this target, because a lot of the time greediness knocks out a lot of people. And I feel like I had a big part in being greedy when I first started. I would risk $10 and I'd be up $20, and just because I was up 20, I'm like, okay, it could probably hit 30. And I checked back in 20 minutes and boom, I was already down $10. And I just had to come back the next day and trade and hope to either just get that 1 to 2 back. And well, we all know how that goes. Once you start revenge trading or trying to like push out a trade, it just ends up not going your way. You start overthinking, you start not following your rules, and it just costs you a lot of money. So I feel like if you guys get into this type of business, you guys really have to like lock in and discipline yourselves to be able to sit on your hands. If the trade is not how your rules are looking like, just simply do not trade. The market's going to be open every single day, well, except and bank holidays and holidays in general, which I think are holidays. But yeah, so just always be cautious. Always be cautious. Never get too greedy. If the trade is way higher than what you had asked for, just close it. I mean, if you want to hold it, it's really up to you guys. I'm no one to judge or no one to say anything, because I went through that phase and there's really nothing wrong with it. It's kind of just, you live and you learn, and it's kind of one of those things that you have to lose in order to win. If you don't lose and you're just winning, when you start taking those L's are really going to hit you hard, and those are going to humble you down, and it's going to make you slow down a little bit and really kind of show you that you have to like slow down a little bit, you know what I mean? I understand everybody wants to make thousands of dollars every single day. Like shit, I wanted to make $1,000 a day 3 to 4 years ago, and for just being consistent and just literally just risking properly, closing when I had to or when I got comfortable that it was good. Even before my take profit, I would close like literally before, and sometimes I even do that to this day on the Telegram. Like I hit a comfortable number where I'm like, okay, you know what, for the day I'm okay with that. I closed. I let them know that I closed, but I also let them know if they want to hold out to the take profit, they can most definitely hold out, and see if it hits. And majority of the time, like I don't know how I get so lucky. I feel like it's just they're watching me or something. I literally close before the box, and before it even hits the box, it tanks and goes the complete opposite way. And some of the students literally be texting me and spamming me, telling me like, no fucking way, like I just lost X amount of money because I held for 10 more minutes, and when I literally told them I had closed. And I really try to keep them on the same page as me. Like if I make 5% for the week, I want them to be making 5%. But sometimes like they're learning, they're getting through those phases. I went through them, but my whole goal for them is to just become successful traders, whether they're making thousands, millions, or whether I have to teach them for the next 3 years, because they're I'm not gonna say they're dumb. They're just it takes them a little bit more to understand, which I understand because it's very complicated. as easy as this might look, because you see 2 boxes and I made $1,000, just because it looks that easy, it's not that easy to understand how I did it. Because if I didn't know how to do it, there's no way I would have known that it was going to go up. It could have easily tanked and I would have lost, and it would have been game over for the day. But I mean, I kind of want to explain this trade a little bit for you guys, just so you guys kind of understand. The terms might be a little out of the blue for you guys, so don't get too hard on yourself that you don't understand what I'm saying, or that you start skipping the video. So basically here, I I'm not gonna say I woke up. So I was at work. 9:30 is market open, like I told you guys in the previous video, if you guys were able to see that. It's 9:30 was the previous before 9:30 is basically previous pre-market candlesticks. So basically how the market was moving when it was closed. So as we can see from here, from 9:30 all the way back here, we were bearish. We were looking bearish for the day, but then this kind of brought us to the upside. So I kind of I'm not gonna say I took a long shot, but I was like, okay, like let me see where there's any liquidity. Liquidity is basically a lot of orders, where there's a lot of resting orders, where basically price wants to go to tap them in. So basically, if we're coming down and we go like this, and then we go up, that basically means that there's orders all right here. There's orders. Let me use this one. There's orders right. That's too big. There's orders right there. There's orders right there. So basically, obviously, we're gonna want price to basically come in and fill those orders to then continue the move upwards. But liquidity for a lot of retail traders, like a lot of beginners, when they see price, let me delete this one. When they see price wanting to come down and take these liquidities, a lot of people, a lot of retail traders are like, oh, it's about to go down. So then they enter a short position right here. They're like, oh, like above these highs or whatever, and then they want to go long, short. That's what liquidity. That's the beauty of liquidity. Is it's gonna do basically grab those orders at the bottom to then continue the move to keep going up, vice versa. If price, give me 1 second. If price, let's just go up here to these Picasso drawings. Let's just put it like this. Okay, so if price, you're just gonna make one bubble, boom, there's buy side liquidity. This is the upside. So if price is right here, right? Oh, price is right here. Sorry, there's a lot of orders to be filled right here. A lot of orders. So what price is gonna want to do is come up and take out those orders. So then what's going to happen is the market makers are going to come up here. They're going to push price because they see a lot of resting orders. Retail traders are going to be like, okay, it broke them, so now we're gonna go long and get a 1 to 3, we'll just say. But with liquidity snatching that buy side, it's going to do the opposite. It's going to come back down. It's going to create an imbalance, like a gap in the market that needs to be filled. Whether it's an order block or fair value gap, I'll get to those later on. Don't worry about them just yet. It's going to go in there, tap in, go back down. And basically, when that happens, as you can see, it came in. Obviously, if they went long, it already went down, stopped them out immediately. Like, literally didn't even give them a chance. It basically went up. They made, like, we'll just say $5. And then boom, they lost $15 right on the same move. And then what happens? They're like, oh, I'm gonna enter again, like right here, because it's going back up. And then what's gonna happen? It's just gonna enter an imbalance or an order block or whatever term you guys end up using, and it's gonna take them out once again. Why? Because the sellers are gonna be strong because they took this buy side liquidity. So when it hits that imbalance, the sellers are gonna be looking strong. They're gonna put obviously like above those highs or whatever. And they're going to be the ones that take like pretty much their money, because that's what the market kind of consists of. It's not just floating money or whatever. It's people with money going against the trend that end up basically I end up grabbing some of their money. So if I'm making 1,000, that means if 10 people were trading for $100, that means I like their stop loss was $100. I pretty much took 10 of their basically 10 people's money. I took $100 from 10 people. It's a harsh reality of it. I mean, when I was losing $500 or whatever the case, that means someone else was pocketing my money. Whether it's someone in a $500,000 trade, it really doesn't matter what it was. They snatched my money. But now that I figured out the strategy, I figured out everything after years of just looking at this fucking green and red bullshit go up and down or go sideways. I can finally say that I found my edge in the markets. And obviously you guys don't see me flexing fucking cars, watches, and I don't have a fucking Rolls Royce Cullinan or a Porsche GT3 RS because it's really not as what's it called, as crazy as people think it is. Like, yeah, I'm making $1,000, but it goes a long way because I have an LLC. I basically have to show like statements. Like, I don't even want to get into all that because that's kind of my personal business, but I do have a lot of things cooking, and I'm really hoping that with this US fucking war shit or whatever, I really hope that crypto does become a big thing of buying power because that's kind of where I have everything. So if I can start really using crypto to like I know there's some companies that allow like you can buy a car with crypto and everything, but their tax rates are fucking insane. Like that's why I sadly couldn't get the GTR. That was gonna be a very fucking insane purchase, and I fucking promise you guys that I would have fucking made content like a motherfucker with that bitch. I would have been in the city every single day. But I mean, it is what it is. I mean, yeah. I think I'm just gonna cut the video right there. I really hope you guys kind of learned something from this, like what trading is, like the markets, like what type of pairs there are, or markets, whether it's like I said, futures, commodities, indices, metals, what is it, futures. There's a lot of markets out there. Just kind of find the markets you guys like, see what offers you guys, I guess you could say good money depending on your capital. And I really want you guys to know that it is possible. I did it. You guys have been seeing on my Instagram stories for a very fucking long time now where some of my trades were good, some of my trades were but now it's just consistently been I've been smashing these fucking markets. I've been the market maker pounder, man. It's kind of crazy because ever since I pretty much am where I am, I always wanted to be in this fucking spot. I always wanted to consistently. When I was fucking tired of losing, I was tired of always seeing that fucking negative number or my profit loss ratio always fucking red, blowing accounts, always having to add more money. Or now that I took a prop firm route, like I've only bought like 5, and I've lost 2, and I'm funded by 3. So I mean, it's kind of one of those positions where I want all of you guys at. If you're watching this, I know the other video had like, last time I checked, I don't know, I think I had like 50 views or something like that. Like if it's 50 of you watching, I really hope you guys find a fucking edge so you guys can escape that 9 to 5 and literally just be stupid fucking rich and do whatever you guys want with your life. Like I mentioned in the other video, if you guys got to it, like everybody's rich is different. But I want my rich to be fucking stupid rich. I want to be able to fucking just pull out 100,000 just because why not? And just leave it sitting there on my fucking desk or whatever. I mean, the day is one yet to come. And whenever the day wants to come, I'll be looking forward to it. But I did mention it in the last video too at the very end with like codes or coupons, whatever, so you guys can join the Telegram so you guys don't have to like, I guess, I guess you could say pay the full price. Some videos won't even have a coupon because I can't make a coupon for every single damn video, and because basically all that money goes into my LLC as like my source of income for these fucking American Express gold cards that fucking I tell them I make X amount of money, so when I make it in trading, I literally sometimes cover my ass by like if anybody joins or whatever. I just throw it in there and it kind of just, it just literally just marinates in there. But I guess since the last one was the introduction video, I did do a 20%. I'll probably just do 15%, and the coupon code could literally just be trading. If you guys want to join, two people did join. If you're watching this, I really want you to lock the fuck in, motherfucker. You better lock in. Um, I'll have the call with you guys soon. If Fridays I don't work, I'll do some live trading. Whether anybody tunes in or not, they'll be posted on the YouTube. This is just gonna be like a very informational fucking YouTube for you guys. Um, this is kind of just to really help you guys, and you guys don't gotta go watch 100,000 videos about people talking about so much bullshit. And one says trading is this, and then the other one says trading is this, and then you guys have like 50 different definitions in your guys' fucking journal or whatever. This is pretty much just what I know, what I basically started with from the very fucking beginning to where I'm at right now. And yeah, I mean, I'll cut it right there. I really hope you guys enjoy these videos that are gonna come out next. This is day one out of who the fuck knows how many, but yeah, guys, I'm gonna end it here. I hope you guys have a great day, great night, or a good night. Um, yeah, just fucking get ready to learn how to make some motherfucking money, and that'll be it, guys. You guys have a good day. Bye.